Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, I wanted to go over my current buy recommendations. As you've probably seen, I had a new buy recommendation on the iShares Commodity Index, which is approximately 70% energy, oil related, and also the change from buy to neutral on the solar stocks, which is a temporary change. I think there's tons of more upside, but there could be a decent pullback here in the short term. But I wanted to go over my current buy recommendations as I do weekly, so let's get into it. I'm going to try to do these in order, maybe order of things that I would add or have in my portfolio or be able to buy tomorrow morning. And one is the S&P 500 being bearish on it. So, I'm bearish on the S&P 500 from a long term, intermediate term, and short term. The reason is these negative divergences that we have on all three of those charts. As we hit all these higher highs, we got lower highs. It's flashing a caution sign. Beware, a change of trend is coming. Seasonality turns bearish, which is making me nervous because I hear a lot of market technicians referencing that, and I just don't like when everybody is on my page. But anyway, the chart is what it is. So this is something. So the thought here is, maybe 10% of your portfolio you have short the S&P 500 at this. I think I'm up to about 12. Um, and here's where I went neutral the last time and then bearish again. So I'm a little bit, behind here, but these are very small range days. This could get wiped out in one big down day. So I'm not really worried about that. Why is this not? Okay. What is going on here? Okay, here we go. Okay. So anyway, so being even being short the S&P 500 the last 3 or 4 weeks, I don't know, maybe the market's up 2% over that time period. Whereas my longs, my solar stocks, my cannabis stocks that I was long, my even the 10-year treasury is all those things are up a lot more than the market uh, is that I've given back being short the S&P 500, but you can see how fast these things can go down. So anyway, bearish convergent, negative convergence on the S&P 500 on a weekly and daily and monthly basis. So that would be something I'd want in my portfolio. This is the new recommendation that I did today on the iShares Commodity Index. Again, this is I'd reference you to watch that. It's just go to my channel and you'll see it. Just put it out. And this is my way of getting into energy. I really think oil has bottomed here, and I think the upside is enormous on crude oil, and Brent oil actually looks better at this point. But I don't have the perfect setup on the chart. So on this particular, I've used DBC, the Reuters Commodity Index, but that chart isn't as attractive from a reward to risk standpoint as this one. And so I'm going with this until I can get more involved in other energy things. And so I purchased, I'm suggesting purchasing here at 22.77. This is the I don't know, 2.5 year symmetrical triangle that's in place, these two converging trend lines, and a close above, let's say 23 would put this intact. And if you measure the base of this triangle and project upwards, you come up with almost a $31 price projection, which would be 35% upside from where we are today. Uh, I'm looking for things that aren't going to just follow the market because I'm not real bullish on the market right now with all those negative divergences. So this is one that really fits the bill, and I believe there's a handoff here that could happen. It could happen. And that handoff would be metals, which I've been very involved in over the last 18 to 24 months, owning gold on this channel, suggesting silver, suggesting platinum, suggesting copper when nobody else was. I think those are a little long in the tooth. There's still some upside, especially, we'll see on gold here shortly. We're right at resistance on gold. We'll see if it can break through. But I think that, those things have become very popular and very crowded, and I think everybody's kind of all in. And I think energy has been oil related things have been very under owned. And if I can get this turn right here and get in at the right time, I think the upside could be enormous. So that's it. GSG, this is what I'm buying. Putting my stop at 21.5. Reward to risk is, I don't know, 7 or 8 to 1, which is really attractive. Okay, XLP. This is the Consumer Staples ETF, and this one hasn't been going too well. So here's the triangle. Here's the breakout. Here's where I purchased. Went up for a few days, couple days, and then it's come down. I lowered my stop. I don't want to get stopped out at this point, but if it breaks 80, I'm out. So it can't really go any lower than it was 2 days ago. This is a daily chart. Each bar represents a day. You can see we're getting a rainbow bearish convergence where all these moving averages are coming together and price is sitting here. So two things can happen. This is a la Tom McClellan. He's the one that turned me on to this, so I want to give him his due. Type 1 convergence is that prices will just meander here until the moving averages move down, but will stop going down. The second type of bearish rainbow convergence is prices will retrace up to that convergence. And that would be, let's call it 81 and a quarter, so 81 and a half. And if it can't break through on a daily close, so if I see it come up here and bonk his head, I'm going to close out my position, but I'll be taking a smaller loss because if it can't break through, it promises a lower low. If it does break through, then that's very bullish, and that would put all these things intact, and we'd have huge upside. So it's going to be a little trading oriented here in the next day or two. This is very similar to Antero Resources, AR, which I also initiated on a few days ago, an old name that I'm coming back to. So, this is a little muddled, but that's the plan. And here's Antero Resources. This is the exact same thing. It looks like prices want to come back to that convergence, which would be a type 2 convergence. So, and that's what I said on the initial call. I've been seeing a lot of retracements back to the convergence type 2s on these kind of issues. This is a weekly chart. Each bar represents a week, not a day like the consumer price index. I'm sorry, the consumer staples that I just showed you, the ETF. So that would bring prices up around 34 or something, which would be a really nice gain from where we purchased. And again, if it can't break through on a weekly close, then I'll be selling and going neutral. And then, if it somehow breaks through a week later or whatever, I'll have to jump back on that train. But I thought this was a great place to get in. Even if I get 34 out of it, it's a really nice gain. We had a bullish hammer a week ago, and then we had a bullish engulfing pattern last week. So there's something going on here, and natural gas actually looks like it's bottom too, but it's complicated. So anyway, both of these have negative rainbow convergences, and we'll see if they're able to break through, which they do sometimes. The 10-year Treasury, this is just steady. Just got a monthly dividend on this. and it continues to chug along. I'm looking for 100. I know it's not a big upside, but it's steady. And if the market is down and this is up, it's going to help steady your portfolio. I probably have 30% of my portfolio in IEF, IEI, which is a 5-year treasury, which is shorter, and SHY, the 1 to 3 year treasury, which again, those two are less volatile than the 10-year treasury. But I'm still looking for higher prices and lower rates, which is kind of bucking the trend of what everybody thinks should happen. My stop is at 93. Exelon, this is going to go with interest rates. I'm surprised it was down last week with interest rates, with the 10-year treasury up and rates down. You would think utilities would do well, but it didn't. It was down. And again, I got my stop at 41. I'm looking for one more higher high. I've mentioned this, talked about it. When we got this high, it confirmed the high. We got a higher high on our relative strength index saying the buying was intense and it confirmed that. So we didn't have a negative divergence, a lower high on our relative strength index when we hit this. So I'm expecting one more higher high. The price projection based on the descending triangle is 51. So it's suggesting maybe one more higher high. But again, as I've talked about, even when I was buying down here and suggesting that I don't own as much of this as I did when I got long back here. You'll see the same thing in platinum. You'll see the same thing, in cannabis kind of thing, where I went neutral and then got back involved at much higher prices because the reward to risk is the most favorable here. You know where your stop is, where your out is, and you got all this upside. But now with prices elevated, your reward to risk is a little bit less. So I have a smaller position in this, but I do have this again. If I'm bearish on the market, utilities should do pretty good in a kind of a defensive market. Verizon, I think this looks great. So the chart that I showed that I've been focused on was a close-up of this symmetrical triangle. So we had a bigger picture of this that I talked about, and it had some fits and starts to get started, and then it really shot out of a cannon, and we got a bullish hammer last week where prices opened up at the top of the range for the week, traded down by the end of the week, was back up near the high. But I wanted to show you the bigger picture here. This triangle, this smaller triangle, which is 6, 7 months, it's legit. It has a $50 price projection, but I want you to see why I've been, not pounding the table on it. That's old Wall Street stuff. But the bigger pattern here, this was on a daily chart that I showed you where each one of these bars was a day. This chart is a weekly where it shows each one of these bars as a week. And look at this big pattern that's developing, potential pattern with the left shoulder, the head, the right shoulder, the neckline. It's like a man or woman hanging upside down. If we get a close, I don't know, 45.50 or so, that would really get this big pattern going. And the price projection would be 63, and we're at 46 right now. So that's huge upside. Even, we're already up, but this would be much bigger. So trying to show you the big picture on that. Platinum, shot out of a cannon. Here's where we went bullish. Nobody wanted to own platinum. Now everybody wants to own platinum. The price projection based on the symmetrical triangle is 144. So I went neutral up here, and then I went back to a bullish stance. And so I should have those arrows in here. I apologize. You can see on this high, we got confirmation of that high on our relative strength index, suggesting another high is coming. So as on the call, when we had these pullbacks, after selling some on the way up, I've been reaccumulating. But again, I have a smaller position than I had back here. So I'm have a, so I'm not as bullish because we're at 125, whereas the price projection's 144. So My stop's at 117, so there's still a really good upside. Still bullish on platinum. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Tell your friends and neighbors, your family. Give me any comments. Adios.